Hi everyone and welcome to Momentum channel. My name is Mo, and in this video, I'm going to be talking about our stock market investment portfolio that my wife and I have currently working towards reaching financial independence. For those of you who are new to my channel, my name is Mo from Momentum Finance. My wife and I are investing in the stock market passively through the power of compounding by investing in high quality, low cost, broad market index fund. And even though we've been investing for about 7 years now, we've actually changed our investment approach quite several times. I started investing in individual stocks over the time, got exposure to like sector-based stocks, individual stock pickings that were high flying at the times, but it turned out to be not really the best picks. Gradually over time, changed my approach to passive investing through index funds. And even though when investing in broad market index funds, the returns may not be the greatest, I feel like we've been able to start seeing some of those gradual returns and have that peace of mind, like, can easily and comfortably sleep overnight, knowing that over long enough period of time, investing through low cost broad market index funds gives us that approximately 8 to 10% return. Now, again, I'm not suggesting that that's always going to happen each and every year, but over a long enough period of time, say the next 10 to 20 years, that's an average that one could expect from the stock market through this method and approach. So with this video, we're going to be walking you through that and what are some of the other benefits of investing passively in index funds and why this method is one of our favorite ways of investing in the stock market. If you look at our portfolio currently, it's sitting at a total value of $573,000. The amount of invested in this portfolio as a whole is $505,000, 398. Overall return for the portfolio currently sitting at 13.4%. Our portfolio mainly consists of three holdings. The biggest holding that we have, as you can see from this chart, is the shares of 𝗖𝐋𝐈𝖖. For short, we call it just X equity. It is an all-in-one asset allocation ETF. What it means is that through this portfolio, which is actually consists of mainly X equity, which is iShares Core Equity ETF portfolio, we are getting exposure to the entire world stock market. X equity allows us to get that global diversification, meaning we get exposure to the US stock market as a whole, Canadian stock market, international developed market, as well as emerging markets, which is a very good way of getting that global diversification in there. Looking at the X equity as a whole, I did mention that it's a way to get that exposure all for a low cost. For example, if I hover over the fees, it's only at 0.20%. That's the MER, the management expense ratio. That's the overall fee that you would pay by holding on to this kind of ETF that gives us exposure indirectly to 9,000 plus companies worldwide. Even though that fee is very, very small, some might do the math and say, hey, you know what, Mo, in your portfolio, you have over $500,000 invested. So if you do the math, that's still quite some fee that you are paying. This fee actually comes out of the performance of the ETF. So it's not something that I do see actually coming out of my accounts, but indirectly taken out of the performance. And if you look at the performance for this ETF, I'm going to show you momentarily. This fund has not been around the longest. In fact, it was incepted back in August 7th of 2019. But ever since its inception, it's showing an annualized return of 9.9%. And if you look at the past 1 year return at the end of December, it was 17%, 3-year annual return of 7.6%. You do see that ranges are like sometimes can be lower, sometimes can be higher. In fact, if you look at the calendar year, just to show you, in 2020, it was up 11.7%. 2021 was close to 20%. 2022, which was the year that overall the market was not the greatest, it was down by close to 11%. And last year it was up 17%. And year to date for this account, X equity, it's actually up by just shy of 0.8% positive. The returns can go up and down, but if you're invested for the long term, you are actually going to take advantage of that average return. X equity does pay a dividend as well on a quarterly basis. The dividend amount that it does pay goes up and down, but on average, when you look at the yield as a whole trailing 12 months hovers around that 2%. That's the, I think, safe percentage that you can go with. One thing I want to bring to your attention is as well the companies that you get exposure to through this ETF. It's very diverse. You get over 9,000 companies worldwide. And if you look at the top holdings through aggregate underlying holdings, you're looking at companies such as Microsoft, Apple, Royal Bank of Canada, Amazon, Nvidia, TD, Shopify, Enbridge, Google, Meta platforms, many of the companies that we know. But like I said, you have a gazillion number of companies, over 9,000 companies here worldwide that you get exposure to. If you're interested, you can easily actually download these holdings. I've added actually something similar to my dashboard that I've developed in Google Looker Studio. If you hover over 𝗋𝐈𝐿 on the left side, on the web version of it, and you can easily zoom in by double tapping on the chart, hover over the countries that you see. There's a circle next to it, and it does show you, for example, what's the exposure you get to 𝗋𝐈𝐿. And I've updated it based on the latest information currently as of January 12th. As an example, through this 𝗋𝐈𝐿, you get around 1.65% exposure to Australian market, 0.45% to Indian market. You see how it changes, around 5% to Japan, South Korea, China. And if you hover over Canada, you see, for example, 23.88. US is around 45%. Now, many folks have this question of the exposure to Canadian market seems to be quite high, given that Canadian stock market as a whole only accounts for about 3% of the world stock market. That's a fair comment, but there have been some research, and I believe we've seen some of that recently as well on Blossom, as well as on YouTube. My good friend 𝗖𝐋𝐈𝖖𝐊 did a good review of that, whereby based on research, it shows that the reason some of these all-in-one asset allocation ETFs in Canada give a higher exposure to Canadian market is that based on their research, having this level of exposure lowers the volatility of the portfolio. So that's the main reason that they have higher exposure to Canadian market. But if that's something that maybe bothers you, you could consider some alternative ways, possibly having your own, exposure to the underlying ETFs within 𝗋𝐈𝐿. For example, you can get exposure to emerging markets ETF separately, exposure to Canadian market as a whole separately, US and whatnot, and then you decide on the balance that you're comfortable with. Alternatively, if you're thinking of getting more balanced exposure based on actual, market weightage, VT, which is Vanguard Total World Stock Market ETF, is another option for you to consider. The only downside to that is that it's available in US dollars. My wife and I, we currently have some of that exposure in our RSP account. So VT, you do see that it has a very low management expense ratio of only 0.07%. And if you look at the exposure by country, the exposure for Canada is only at around, I believe, that 3%, which aligns with what Canadian markets, weightage should be. But the only downside, like I said, is that it's in US dollars. So when you are buying it in your brokerage account, you may incur some of those costs around conversion fee. That's something for you to be mindful of. Going back, I talked about the benefits of holding on to all-in-one ETF portfolios. Even though you're paying that fee as opposed to holding on to, like, let's say, companies and stocks separately, there are some easy advantages that come with it. BlackRock has done a good job. They have this page whereby they talk about all asset allocation ETFs, which, as they identify, it's a low-cost diversified way of investing. And some of the key benefits of them that they highlight is it's simple and efficient, because asset allocation ETFs give the investor a way to build a whole portfolio in one convenient package without having you to do a lot of picking and choosing separately. Plus, they provide easy diversification as they provide exposure across Canadian, US, international, developed, and emerging markets. They come with automatic rebalancing, which means they continually monitor their weightage and make sure that they get aligned to that exposure. So say if they, for 𝗋𝐈𝐿, they have a target rate weightage of around 45% to US, if that target weightage is kind of out of whack, and let's say because of the growth in the US stock market, they see that now it's sitting at 47% as an example, they're gonna make sure they pump in more money into the other sectors and other geographical sectors to make sure that the weightage is met within the threshold, that acceptable threshold that they have. And lastly, it's a way of investing with low cost management fee. For us, the reason we ended up going with something like 𝗋𝐈𝐿 as almost 90% plus of our portfolio is it's really simple. We don't have to really manually monitor anything. Every day we have this recurring buy order in our accounts. And automatically through Wealthsimple, those money is bought into shares of X equity without us even having to worry about what the price of X equity is or where things are at with it. That's why we love it and we are investing in it mainly. With X equity, you're getting 100% exposure to stocks. But I understand that some people may not be comfortable with that. They might want to have some level of exposure to fixed income, which is why, as an example, BlackRock has alternative version of it. They have a version with 20% bond, 80% stocks, which is XGRO. They have also a version of 40% bonds and 60% stock, which is at XBAL. And then tilting it over, higher exposure to bonds with 60%, which is XCNS. And lastly, they have even a version for 80% bonds and only 20% stocks, which is XINC. So if you prefer slightly different exposures, I have made a video on my channel that I will link in the video description talking about the ultimate guide to ETF investing here in Canada, talking about various versions if you want to pick your own ETFs and get your own exposures, or if you are interested in all-in-one asset allocation ETFs. Do check that video out. I think you're going to find it beneficial. Let me quickly walk you through the portfolio that we have. As you do see, currently our best performing holding here is VTI. As I mentioned, both shares of VT and VTI, we are holding it in our RSP accounts, given that they are both in USD. VTI shares are up by 8.9%. Then following that, we have shares of VT, which is up by close to 6.6%. And lastly, shares of X equity are up by 4.6%. You do see here how much is the expected annual dividend income from each of these, how many shares we have. Our biggest holding is X equity. We have currently over 18,800 shares of it, which is definitely over $500,000 invested, and we are super happy with it. Our portfolio management expense ratio for each of these holdings are showcased here. Given the exposures that we have to each one of these holdings, as a whole, our weighted average MER is at 0.19%. And like I said earlier, this fee is not something that comes out of our account, but directly taken out of the performance of each of these index funds. Thank you so much, everyone, for watching this video on the hand. I hope you found it beneficial and you gained something of value from it. If you're interested to see our trades as they happen, I do encourage you to check out Blossom app. It's a wonderful, amazing community of investors here in Canada and US that share their expertise, they share their questions, and you can learn from one another. You can see their people's actually trades as they happen. You can follow your favorite investors. Hopefully I'm one of them, whereby I also post other useful contents more frequently than YouTube. Here on YouTube, I try to post once a week or so, but on Blossom, I'm quite more active, responding to other questions that are popped in on Blossom app, as well as some other educational content that I post on my own profile. I hope to see you all on Blossom. If you're interested, you can download it for free using the referral link, which really means a lot to me, and it really helps me and my channel to grow. If you found this video beneficial, I also appreciate it if you share this video and other contents with others who may benefit from it. It really helps me and helps the channel to grow. Thank you so much, and I hope to see you all next time.